TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648, and I'll be happy to answer them if I can. And I would like to start the show about we have to talk about this grain market because I posted into Tiger TV the weather map of what has occurred over the last month or so and what the expectation is for the next 7 days. And this is the problem that we're running into, is that we have a tremendous amount of heat coming in, plus there's very little subsoil moisture, and that's causing, prices to go, through the roof, so to speak. But let's just take a look at it for just a second. And I want to tell you a little story, folks. People are comparing this to the 1930s, and frankly, I don't think it's anywhere near that yet. If this were really that way, I think corn would be up over $1 a bushel today. Maybe it will be before it's over, but it's up only about 20 cents right now. But let me explain to you, one of the biggest turning points in my trading career occurred in 1976. I was off as a private trader. I was making my living trading. I had suffered a tremendous debacle during 1974, where I'd lost all my money during the crash of 1974. It was known as the October crash. It took everything down, much like they do nowadays with margin calls and stuff, and I was involved in that. I was young. I didn't care because I knew I could make it back. So it wasn't too bad. But what happened was I had fought back, really well over the past year and a half, from mid-75 to sometime in the spring. It was actually early summer, I believe, 1976. And I had bought so many soybean contracts and oil and meal. Anybody that would listen to me, I told them to buy it. And I like to talk. So a lot of people, bought. All my relatives and friends, neighbors, the pediatrician, everybody, lawyers, accountants, everybody that I could possibly think of to buy these contracts. And I came in on a Friday afternoon. There was a major crop report, and it was talking about how important this report was going to be to the soybeans and the corn and wheat and everything else. And I came into the office. We didn't have all this high tech stuff. Believe me, we really didn't have anything like this. We had a Reuters machine, a Knight Ridder machine, a Bunko Ramo chart machines up there, and you couldn't get intraday charts or anything like that. But the talk coming out of Reuters was that the soybean crop was damaged so badly that the only soybeans that would be available would be in the Smithsonian Institute. I swear to God, that's what was on the tape. And I immediately sat down, and I was working with my broker, Bob Shattuck, who had worked with me when I was at Conti Commodities. He was my broker there. And we started writing tickets to sell every position that I had one tick below Friday's close. In other words, if this market, they were calling it up 3 to 5 limits, and it was just really just very, very hectic times. And my feeling was that if it couldn't go up off this kind of news, I didn't have anything to do with it. And the early morning call was for the beans to be up about 3 limits. That was equivalent to about 90 cents a bushel. And beans are up about 40 cents a bushel right now, and this is really bad. What's happening? There's no question about it. They are having a lot of trouble. But as the day progressed in the morning, it was about an hour. We got that initial call. About a half an hour before the opening, the call was, there's going to be up the limit, at least 3 limits, but there's a little bit of selling in the far out next year contracts. These were the November for 77 beans. And then about 10 minutes before the opening, there was another call, and they said, well, there's a little more selling coming into the far-end options, and we're going to be up the limit, locked really tight in the first options, but, there might be some selling in the back-end options. And about 1 minute before the call comes in, the guy comes on, he's screaming in the squawk box hysterically, my God, my God, my God, they might not even open higher. And believe me, folks, they opened a penny higher and were locked limit down within 5 minutes, every single option of wheat, corn, beans, oil, meal, everything that we traded, and they stayed down for 3 or 4 days. This was in the midst of the most bullish news that they had ever seen in soybeans. So what we're going through right now is nothing more than what's happened in the past. I don't know how it's going to end, but it's parabolic, and we know how parabolic markets end. So keep this in mind. I know we took a nice piece of that corn market out of there, but for heaven's sakes, you can't get we're not going to take the whole thing. I never expected, to do anything like that. So just remember that we get the slightest bit of rain. You will not believe how these crops can come back. It's truly amazing. I know you have houseplants and tomatoes or whatever, and I'll tell you what, if you go out and sometimes you're traveling or something like I do, I'll forget to water my plant, or I'll ask one of my neighbors to water. I got a special tree that I like in the patio, and that needs a lot of water, and sometimes I'll forget. But that thing looks like it's going to die all the time, and all you have to do is, sprinkle it with a little bit of water, and it comes back roaring. So, that's the message behind here. We'll be able to follow this. This is what we have going right now, and I want to try to explain to you, these weather markets are very, very hard to trade because they go vertically up and they go vertically down, but they follow the ratios, relatively well. And, all we're trying to do is to find, an opportunity. And now what I'll be looking for now is an opportunity to take the other side of this. And one of the reasons I'm going to be doing that is that this move in corn has been accompanied by a downward increase in open interest. In other words, the people are getting out of the market. Shorts are covering, and that's what's causing the market to break to the upside so much, because as shorts cover, the prices go higher, and there's no new buyers in. And as soon as that's finished, then the shorts are done covering, which way it'll go. It'll go back down again. This is what happened when we had the parabolic move in the silver back on April the 25th. We talked about that. We were watching the open interest. The open interest was telling us that that's what was not happening, and that's what we're looking for. We are in, without doubt, one of the mother of all weather markets that we've had. But frankly, folks, if you look at it historically from someone who's been trading for 6 decades now, this is not. I would expect the corn to be up at least $1 a bushel. And believe me, corn is much more susceptible than beans are, but beans are up on a percentage, are up more. They're up 44 cents, which is roughly $2,000. Beans are up about $1,000, but the beans can come back very, very quickly. They have so much resilience that it's just it's truly amazing. So what we want to watch is to you'll see some really crazy action. I mean, you're going to see some really nutty stuff. But that's just characteristic of what's happening, with the weather market. But they're fun to trade, and fortunately with this electronic trading that we have now, you can certainly, get in without risking very much. You can, watch these half-hour charts and 5-minute charts, and you'll see, some tremendous moves that we have that have been going on. If you remember, when we first started talking about this thing in corn, we were looking at the bullish Gartley pattern that we had in the corn, and what we were doing is, that was December corn we were watching it in, and that's the one that I posted in the Tiger TV. And at that time, we were looking at a situation where the nearby corn, which is the July corn, was selling at a large premium to the December corn. That's because they were expecting a large amount of corn to be coming in the new crop. Well, this has all changed. So what's happened now is the fact that you've had a situation where the corn has gone up quite a bit, and the nearby corn, the July corn, has caught up, or actually the new crop corn has caught up with the old crop corn, and they're both selling at roughly the same price. They're within a penny of each other. It used to be 60-cent difference. In other words, July corn was 60 cents more than December corn. So this is what we're watching. Now, on the long-term chart of July corn, it's trading right at the 61% retracement of last September highs. We still have a measured move. We could go up another 40 or 50 cents, but folks, this is not like what happened in the 1930s. Believe me, in the 1930s, what happened was there was a dust bowl. We didn't have crop conservation and all this other stuff. And I'll finish a little bit more about that. We've got a call from our friend in Philadelphia. John, are you there?
Yeah,
there you are. How are you?
I'm sorry about that, Larry. Good morning to you.
Thank you. You too.
Very good. Yeah, the technical difficulty seems to be resolved here. Thanks for that perspective. I always love hearing you reshare those experiences with dramatic weather markets. It's always a good grounding to base some thinking on. So thank you. Larry, I wanted to ask you about gold, please. I saw earlier in the morning you posted a short-term pattern. In it, you showed how the recent rally here in gold Friday, Monday, and this morning was failing at a Fib 786 level. So I noticed that. I'll make an observation that the daily gold chart pattern is just a mess. It certainly is obvious that buyers are down, under 1550, which leads you to speculate higher prices could occur, in the future. But nothing decisive has happened yet. So with a market that's a mess like this on the short term, can you just share your thoughts as to what you do trading-wise, trying to not get trapped by, short-term highs, but staying positioned for, potentially a medium-term advance?
Yeah, John, what we do in the hedge fund that we have is that we concentrate on moves that are going to last anywhere from 7 to 14 days. And that's the primary reason of what we're trying to do. We're trying to capture, the bulk of what we call the sweet spot of the move. You remember when we were looking at gold down at that 1558 level, and went a little bit below the the 1550 level, but then turned around. And it was a very small risk in that, and it turned out to be a pretty good move. But that's all we're looking for. That's the primary reason for the reason that we're in trading.
Gotcha.
Do you have a sec? I'm trying to cover a little bit of this, John. But if you'll stay with us till after the break, I had something that I was going to cover at the second half of the show, but I'll do it after we go to the break here. But we'll continue to talk about gold. I really believe that 786 that we hit up there at that 1625 level. If you look at the, later on, I'll post a chart into the Tiger TV, and you'll be able to see that that 786 comes as a down-sloping trend line, that people are watching, and that's just a natural occurring line. You know what I mean?
Yep.
So that's really what we're looking at. We're going to have to take a little break here, John. If you'll stay with us till after the break, I wanted to give you some information I think is pretty important.
Thanks so much. I will.
Yeah, stay on.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and we're talking with John in Philadelphia. You still there, my friend?
I am, sir.
Okay, let me explain something that I think our listeners would really have an interest in, because this is something that's really dear to my heart, because it involves, a little bit of astrology and a little bit of common sense. Over the weekend, CNN Moneyline published some statistics that I think were just absolutely amazing, and it explains, the really value of short-term trading. The statistics were like this. If you'd have bought stocks in 1996 and held them to 2011, which is roughly where we are right now, you would have made about an even money return. In other words, you wouldn't have made $1, you wouldn't have lost $1. However, during that time, the period of about 15 years, if you would have been in the market only on the 10 best up days of the market, in other words, you had to be in the market those 10 days, and in that 15-year period, you would have made 22%. Okay. Now follow me again. If you would have missed those days, okay, you're basically even. So you had to be in the market all the time. Now let's go back and take a look at what happened if you'd have been in the market in the best 15 days. Well, if you'd have been in the market in the best 15 days of the move, you still would have made money, but not nearly as much if you'd have just made the best 10. Now, if you would have missed any of those days, in other words, if you just got, stayed in the market, I believe the statistics, I don't have it right in front of me. I'm going to put them in the newsletter this weekend. But I believe that that if you had missed some of those days, and I forget, I don't want to do this. I thought I could do it from memory, but the memory is jogging. He's not jogging very well. But basically, I'm going to explain it in the newsletter, and I'll explain it on Monday's show. I have the statistics, and I'm traveling, John, so I don't have the thing. I shouldn't have started. I was very excited about it, and the reason why is the principle is, and you got to be in the market at the right time, and that's what we're trying to do when we do timing. Is we're trying to catch the sweet spot of the move, the part that's the best and you don't have to risk very much. That's what pattern recognition helps you do. Do you remember the work that Tom Pelk had done at the Royal Bank of Scotland when he was there? He's now at Nomura Securities on the lunar cycle. If you bought on the new moon and sold on the full moon. So basically what he's doing is he's only in the market for about 14 or 15 days is what he's doing. And that's pretty much what we're trying to do, but we're selecting different markets, by looking at the euro and soybeans or whatever, gold, whatever else we're trading. And that's we're doing that with the patterns. So we're not trying to capture, the entire, length of the bull moon. In other words, buying at the absolute low and selling at the absolute high. That no one ever does that. I mean, somebody has to do it, but it's not the same people.
Sure.
So the main thing is to focus on the amount of money that you have at risk and try to catch the sweet spot of the move, and that's where you can make your best return.
Excellent. Larry, thanks so much for sharing those ideas. I appreciate it.
Yeah, John, and I apologize. I will cover it Monday on those statistics because I have them. And as a matter of fact, I'm packed and ready to get back to Arizona pretty soon. And I'm incognito, that little town north of San Francisco. But I'll cover it on Monday's show, and I'm certainly going to cover it on in the newsletter this weekend. It's very interesting statistics.
Larry, thanks so much. We look forward.
You bet, my friends. Yeah, stay cool back there. I know it's pretty hot there also.
Very good. Bye now.
You bet. Okay, I would like to talk a little bit now about the crude oil market because we've come off the move very, very quickly here off the bottom. We've rallied over 15% in crude oil since June, that June 20th low that we made down there at the last new moon that we had, and of course we had the full moon. It was quite beautiful over the weekend. And that's given us what I think is a temporary top in the stock market, and then we will see. I don't believe that we're going to start down big in the stock market until late July, and that's what we'll be watching. I think that'll be one of the mother of all trades if it does set up like we're looking at, because we've been watching the Broadley model, to tell us to do that. But I would like to switch over to crude oil here for a second because we've had a very substantial move. We've had a 10-point rally in crude oil, $10 per barrel, which is, a lot. It's about 15%. And so this is where, we should have our first resistance coming in here now because we took out the June highs, and that was at the 87 level. And now we broke out above that, and that's when the breakout people will be buying it, and then we should get a pullback. And if we get a pullback into that 81 level, that'll be the one that you would like to try to, come in and look to buy. So the crude oil is holding up. Remember I posted into the Tiger TV the butterfly pattern that was there, and if you remember, we had that same butterfly pattern in the gasoline futures that was making the bottom. That was the real tip-off that we thought that the thing was going to occur, and then we had the same thing occur in the crude oil. So this is why heating oil did the same thing too. We've got to take a little break here to pay a few bills, and then we get back. We'll answer some questions. 877-927-6648.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. 877-927-6648. And I've put the pattern for the soybean market into the Tiger TV. Because we've had a beautiful butterfly pattern has just formed up at the 1.27 expansion at 15.75 per bushel. We're now trading at 15.66 per bushel. We will see if this is going to be a major spot or not, but we'll have to just to see what the patterns are telling us. And this is really what we're trying to do. The news that follows these things, someone asked me a message by email that if I thought that the markets were actually manipulated. And believe me, folks, of all the things that I've done in my life, looking at all of these markets, I mean, I've studied every major move in the stock market going back to 1876 when we were doing the research on the Bradley model. This was every 3% swing in the stock market, and believe me, these markets are not manipulated. And what I would like to do now, what we'll be able to take a look at here, because of the short-term nature of what we're doing on the show today, and it's basically I can't think of this as a Thursday. It just seems like a holiday to me. That's the way it looks. But what I would like to talk about is, we had a lot of things happened in the market as far as volatility earlier this morning. We had a big move in some of these in the market. The bonds have moved more than $3,000 or $4,000 today in the swings that it's had during the day. And I'll take the bond market because it's one of the larger markets. It's far bigger than any of the other commodity markets. But it'll give you an idea of why these patterns work the way they do. How they work, I'm not sure. I know the why part. The why part is because it's just that it's the sum total of all the buyers and sellers, and you have fear and greed, and greed, fear is a greater emotion than greed, so markets will come down faster than they go up. But if you'll take a look at that T-bond chart, just in the last 7 or 8 hours of trading, you'll see that it had a huge AB equals CD pattern that came right down at the low at 148.16, and then it rallied up to the 786, came down, took the low out by one more tick, and then went right back up to the 786 level. So if the market was manipulated, they wouldn't stop at these ratios the way they do. Now, someone can manipulate the market for a short period of time. In fact, the Fed could probably do it for a much longer period of time, but it's basically going to be fear and greed and natural law that's going to take these things the way they are. I'm not sure of all the reasons behind this. I believe, the ultimate timing will probably be astrological, but I doubt if anybody will ever find it because there's so many permutations on, the different cycles of astrology, and they switch just like all cycles. They invert. And we assumed that this was going to be a high coming into the market because the market was moving up into the full moon, but it could have very easily on the 30th or the 1st broken down really hard and came down today. So this is just an assumption that you're making when you're watching these, and you have to add the patterns to the timing in order to get a pretty good spot to try to enter the thing. I was able to find my trade of the year for 2009, which was in Treasury bonds. I'll talk about that more on the show on Monday and post it. And I think you'll get an interesting view of what we were looking for and the fact that it's worked relatively well on what we had expected. Now, when we talk about the overall commodity markets, we've had this tremendous, weather market for the last 3.5 weeks now in corn and beans and wheat, and, we've had tremendous moves. We had the same thing happen in 2007. Remember, beans got even higher than this in 2007. So back in the days when I was trading, there was a joke around the floor that, beans in the teens, because we had soybeans usually between $4 and $5 and $6. That was, and to get above $7, that was a huge bull market. And they always talked about beans in the teens because in 1972 they got to $12.97, I believe, and that was during the Russian grain robbery. And someone said that someday in the future beans would get above $13 a bushel, and they certainly have. And now that's $13 a bushel is usually a floor. So we'll have a better indication of that as we move along through the crop. But remember, even though things look really bad with the crop right now, especially corn and beans can bounce back really fast. Let me tell you, I've been in these weather markets before, and the slightest bit of rain will make these things, look really beautiful. And just look at your houseplants; they come back. And the other growing things like corn and beans and wheat will come back also. Maybe they might not lose the whole crop, but they'll lose, yield will be down quite a bit. Someone asked the question whether this was very similar to what happened during the 1930s. Unfortunately, I'm not that old, so I was not there, but I've read all the history behind that because I've studied these weather markets. And in the 1930s, it got so hot in the Midwest that there were actually peaches and apples would explode on the tree. They would literally pop. And this is one of the things that happened during the Dust Bowl. Well, we have soil conservation and crop management and stuff now, and that's what that's what they're doing, is to replenish the soil. I don't know if you folks really remember this, but I remember this from when I was a little kid, back on the farms and watching the crops and eating the corn on the cob, which I was able to have some wonderful corn on the cob yesterday with my good friend from California. And the fun part is that when we were just kids, they would grow corn, and the next year they would plant beans, and the beans they would just rotate. They would just crop rotation. They would just put the beans back into the soil by mixing them up, and that was how they put nitrogen, back into the soil for the corn. Well, as soybeans became more and more popular, they were brought to the United States by Henry Ford because he needed oil for oil-based paints so that he could put in pigment so that all the cars would not be black. And this is one of the reasons why we have such beautiful colors in cars, is because of Henry Ford and soybean oil, because that's the oil that they use in the paint. And so later on, soybeans became more and more important, and now they're one of the most important crops in the world because it is nature's perfect food. It's a perfect balance of proteins and fats, and that's the reason behind that. So we'll see. I can remember. Well, I don't want to get into some of the old stories about the Depression. I don't want to, to scare people. But frankly, I should talk about this because I think it's important. I talk to my children about it, so I should tell to my boys and girls and friends here at the TFNN. I believe someday in the next 5 to 10 years we're going to go through a period where we're going to have some severe economic contractions due to this debt cycle that we're in, and all these people that have, living the high life and not taking care of their friends and relatives and other people with less things in life are going to learn a really, really bad lesson. And I think that that's what I think is going to happen, just based on historical cycles. That's all I'm looking at. I believe that we're in the cycle like we were in 1837, and that didn't finish until 1846. And so I think that's what we're going through. But, frankly, you got to be really pragmatic about this. If you can't make a buck off these things, don't listen to me. That's the bottom line. If you can make a few dollars, that's what you're looking for. Okay, we've got a call in from Robert in Saratoga Springs, New York. Are you there, Robert?
Yes, I am, Larry.
What can I do for you, my friend?
I was just wondering, a while back you had mentioned that you had noticed possibly the formation of the three peaks in a domed house pattern taking place. Like
yes.
I've noticed that I trade the NASDAQ 100, and I've noticed it there. Do you see that in other indices too, or?
Not so much in the other indices because they are in the midst of a rally back from the May highs. Now, if we were to take out the May highs, which are above 1420, I believe, in the S&P, mm-hmm. then we would probably be looking at something. I would probably be completely wrong. If you remember, Robert, if we went back into 2007, into October of that year, the market made just a slightly higher high. And everybody was, incredibly bullish. The Dow was, I believe, at near 15,000 at that time, and it stayed there for about a day and then rolled over and then dropped over 50%. So
right.
The pattern that I'm looking at now is based on what I see in the Bradley model, because it's been about 75% correlation to the market in the last 18 months, and that tells us that we should be topping sometime here in late July, early August, and then we head down for what should be a pretty rough 12 months.
Okay, thanks.
And all I'm trying to do, Robert, is to match that pattern with what I see in the Bradley model and the P-index dates and stuff like that.
Yeah. Okay, great. I appreciate your opinion. Thank you very much.
Okay, I'm happy to help. And, like I say, folks, this is a business of making money, not being right or wrong. And when you're wrong, you've got to, stand aside and you wait and see what the next thing is going to be.
Yeah. Okay, thanks, Larry.
Yes, thanks for calling in.
Okay, thank you.
You bet. Okay, if you have any questions, folks, 877-927-6648. Okay, we were talking about the bond market and how it reacts to these different news items. The S&P did exactly the same thing. If you looked at it today, we had a move up into that 1875 level. 11375 level, and then it broke down about 20 points, and that's just bouncing around like it should be. The normal trading going up and down. So that's what we're looking at. I wanted to get back to the gold market because I really think this is the one that I really have to keep an eye on, because gold came out of that level for the sixth time. As a matter of fact, that was that 1540 level, 1550 that we've hit so many times. And what we really need to watch now is the correction here. If gold is really bullish, folks, all we're going to get here is going to be a 382 correction, which will be usually an A, B, C, D formation, much like we had with Apple Computer. Remember, we talked about this on the show, the larger show, but this is the type of move that we want to be looking for in the soybeans, in the gold market, is to see a 382 retracement if we, in fact, really get that. So what I will do is I want to put in the same pattern that we're going to be looking for in gold that we had in Apple when it came in at the 530 level in the Apple Computer, and now we are really close to the 786 retracement. We're within about $1, actually about $4 of the 786 retracement in Apple. So that would tell us that we're getting really close to this is the last target that we're looking at in this in the Apple stock, which is right around the 1618. And so far today, we've been to 1614. So this is the place where you want to be, certainly getting out of your Apple stock if you are long it, because it's been, pretty big move. Now, like I said before, this is much like in the corn move. We buy this at 1530 and you make 60 points in it, you're out of there, because, that's a huge move, and, your risk was only about $10 per share, and so this is why you want to be taking a look. The reason why I'm bringing the Apple up is to just show you the type of move that we're waiting to see in the gold. So the next step that we need to do is we need to look at that gold market and see if we can, find the exact price that we want to be buying the gold. So all I'm going to try to do here is I'm going to pull up a gold chart, and I will just give me 1 second here. This data, when you travel, it really it gets to be a little frustrating sometimes, because you miss certain things, and you don't like to do that. But move this up a little bit. Okay, bear with me. I'm going to put this in here, and we'll see, what we're looking at as far as the price level that we want to see it come in at, and that would be right at the. Let me double check it just to be safe. It will be around 1585 is what we'd be looking at. The 786 retracement of the 618 retracement of the gold move will come in at the 1575 level, and the other move will come in at the 1585 level. So we're about $20 away, and the ideal way for this to work would be to have it occur over a 2 or 3 day period. And now remember, this is Thursday. That's really a mental breakthrough for everybody, isn't it? And then we have Friday, because that's pretty good mathematically. So when we come into early next week, that would be a 3 day correction from the high we made on Tuesday. And then we have the move Thursday, Friday, into 3 to 4 days. So if we can get the market in the gold to come down and make a nice little AB equals CD move on Monday's show possibly, or maybe even Wednesday's show, that would really give us a good shot to, give us a spot to really, to buy the gold. I think it has a real chance of making it to the upside, and that's what we're really trying to do. We're going to take a little break here. When we come back, we have to talk about the U.S. dollar, because the euro is getting hammered pretty badly, and that's all connected with the commodity. So 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Just like that, another month has passed, and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. Thanks so much, and good trading.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and we want to talk about the U.S. dollar here for just a second because it affects everything that we're doing. We've been watching the ups and downs of the dollar index for quite a while, and we're getting back to this near the 83.20 level. At that level, we're going to be hitting the 786 retracement. Now, we took out the highs of last week by just a tad or so in the U.S. dollar index, and the euro has taken out the lows also. We need to focus on both of these because the U.S. dollar index is 53% of what the value of the whole dollar index is. So if you have to watch any currency, it's best to watch the euro versus the U.S. dollar, and the reason for that is the fact that you have a a situation where it's the bulk. So, and it's the best traded thing in the whole world. I mean, 1,000 times better than any stock you'll ever want to trade. But this is what we really want to be looking at. So, what I'm going to do now is I'm going to post into Tiger TV the chart going back to the past month or so in the euro, because we're back down to this level, nearing the 123 level, and the whole world is going to be watching it very, very closely. But we're going to be making an AB equals CD pattern there, folks. From the BC leg, we came down 1, 2, 3, 4, 5, 6, 7, 8, 9 days down, and we're now down 1, 2, 3, 4, 5, 6. If we're down 7, 8, we'll be looking around Wednesday as a possible bottom. In other words, the same number of days down in the move, if this is going to be correct. The slope of the line, in other words, the descent of the market, is doing the same thing that it did in the BC leg and the AD leg. They all look very symmetrical. If you get a chance to go in and take a look at it, but it gives you a really good idea of what we're looking at. It's going to affect everything. It's going to affect the stocks and the whole thing. Remember now, we used to have a correlation of about 85% with the Dow or the S&P and the euro, but that's since passed away. We got our final caller coming in from Singapore. William, are you there?
Yes, I'm here. Thank you, Mr. Pesavento, and happy belated Independence Day.
What can I help you with? You've only got a few minutes left, so be quick.
Maybe take a look at Dow Jones Industrial Average, and what I see is that it has been since probably last month it has been doing a higher low. So do you think that based on the rather godly or butterfly patterns, are we out of the low already? That means the bottom already been.
No question about it. The bottom has already been in, my friend. There's no question about that. I believe that we're not going to get a really good down move until late July, early August, William. That's when the Bradley model will turn down. So we have a chance that the Dow could make a double top up here at this 13,500 level and maybe take it out by just a little bit, but I don't think it'll mean very much.
Okay. And in fact, recently, just probably last week, I heard somebody talking about, Dow Jones is in danger of, having a situation similar to the Great Depression in 1929. I mean, I'm not sure whether you think is there such possibility that we are heading towards the same, Great Depressions.
Well, I think history tells us that we have to go through generational things, and I was a generation coming out of the Depression, and now my grandson's coming into an area where he'll probably have to experience something like that. But they usually only last 4 or 5 years in the rest of the world. You got to get rid of the excesses. Where you live in Singapore, you got everything is perfect over there. You got beautiful weather, wonderful food, and, just tremendous housing. You've got the whole world over there. Here we have a lot of problems. We got a lot of debt. You don't have that same debt over there like we do.
Right.
You guys work hard. Here people work 40 hours a week. People in Singapore, a normal week there is 50 or 60 hours at best. Am I correct?
Right.
Yeah.
We work longer hours, yes.
Okay, my friend. Listen, we have to go, and thanks for calling in, William.
Thank you.
Hope to talk to you again soon.
Okay, yes. Thank you.
Bye-bye.